Hey, welcome everybody. Welcome to Community Speed Investing. It's December 10th. I am your host, Doug Erickson. And with me tonight, we have Matthew and Hillary. Do you guys want to say hello?
Hey, everybody, excited to be on tonight.
Hi, everyone.
There she is. We also have Adrian, and he's operating the controls in the background. Adrian, say hello.
Hello.
There you go. We couldn't do this without the support of our entire team, of which you can see their faces and names here on the screen. And they're an amazing group of uncommonly talented people. Of course, we need our sponsors to do this. And thank God we have so many right now that are helping us, especially through 2020 and close out the year in a really nice way. Tell us who you are, Craig. As if we
Hi, my name's Craig Vachon. I am an entrepreneur and also an investor. I have a small venture capital firm called Chowderhead. We invest in great founders of startups who are trying to make the world a slightly better place. I've made a couple of good local investments, including in Looker, Supply Shift, and Draco Motors, and then some outside of the area in Careem, which is now Uber, Zoom, EasyUp, and Anchor Free, which is now Aura and Twingate. I also have a small role at a private equity firm. It's called Next Stage in Paris, and that's a 10 billion euro private equity fund. I sit on a couple of local community boards, including of, by, for, and all, which Sibley's wife manages today, and also Seek Common Ground, which is attempting to take politics out of education. That's my story.
Come on, you have a bigger story than that, knucklehead. Come on.
I also wrote a ridiculous comedic spy thriller called The Knucklehead of Silicon Valley, and I urge you all to buy 3 copies this Christmas season.
It's a fantastic book. So funny. Such a funny book. Thank you, Craig. Bud or Karen, do you want to go next? You're on mute, Karen.
Can you see us?
Yep, now I got it. Okay, so I'm Karen Hargrove. I'm retired from the tech industry. I do investments in large and small and startup companies, focus on Santa Cruz in the area, supporting green tech, still any technology, a variety of areas. My background is in computer science, electrical engineering, and business. So I kind of cover the gamut. And that's exactly what I did for Microsoft as I started up new projects and new products and developed new technology and partnerships. So I'm very excited to see what this evening's group from Santa Cruz has to offer, and hope that we have some great ideas that we can take forward. Thank you.
Thank you, Karen, and welcome. Hey, Bud, how you doing?
Hi, Doug. How are you? Finally got all the video and audio sorted out. Welcome to see my fellow panelists, Karen Hargrove and Craig Vachon. They're wonderful people. My background is I was on the original Macintosh team at Apple back in the 80s. That's like a light years ago. And I ran higher education for Apple. I then went and became CEO of an early stage startup, which became Macromedia, took it public in 1993 and ran it as a public company for the next 5 years. Macromedia was eventually sold to Adobe Systems, which still has it today. I spent 15 years in venture capital with Accel Partners in Palo Alto. They also have offices in London and in Israel and elsewhere. And Accel Partners has done companies like Spotify, Lynda.com, Atlassian, Slack, CrowdStrike, and of course, Facebook. Locally, I formed Central Coast Angels, I don't know, about 5 or 6 years ago. And it's been a community of individuals who are interested in investing in companies locally. You heard some of the companies that Craig has invested in as part of CCA. Another company that we've invested in is Paystand, which is doing quite well. It's a fintech startup here. And so I'm very glad to be here. And thank you, Doug, for including us.
Thank you, Bud. All right. Now we're going to pass it to Hillary, who is going to tell us a little bit about what regulation crowdfunding is all about. Take it away, Hillary.
Hi, everyone. Can everyone hear me? My name is Hillary Talbot, and thank you for everyone for coming to this event. So about a couple months ago, I approached Doug about doing some sort of community crowdfunding event, and let me explain why. So I help small businesses and startups raise money through crowdfunding, and one of my clients is New Way Homes. And so what I was noticing after the raise went live in September is we had very few local investors. And so we've had, since I've been working on startups and community capital, I've heard a lot of people say they want to invest, but there seems to be a missing link between people wanting to invest and actually doing it. So this fall, we had 4 crowdfunded raises live here in Santa Cruz. So now we're at a critical mass where we can do this investor speed dating event. So I'm really excited that everyone was able to make it tonight. And I would love to go through what crowdfunding is quickly for people that don't know. And then at the end, I'd be happy to field any questions. So really quickly, regulation crowdfunding allows everyone to invest in startups and potentially earn a return. So what is regulation crowdfunding? So regulation crowdfunding was established in 2016 out of the Jobs Act. Companies can raise up to $1,070,000 per year through an SEC approved porthole. So think WeFunder, Start Engine, Republic, etc. They can choose whether they would like to offer a debt, loan, or an equity offering. And then if they want to offer perks as well. So think of that as you invest $100, you get a mug type thing, as well as potential returns on your investment. And then the company also decides when they put together their offering, what their minimum investment is. And oftentimes it can be $100. So the companies you're going to see tonight, the investment minimums range between $100 and $1,000, and anyone can invest. We fund New Way Homes, Parallel Flight, as well as Carnot Compression. You can invest online, and then California Farm Link is a check. So it's a little different, and we'll talk about that. Gary will talk about that later when California Farm Link presents. So how much can each investor invest? So the language out of the SEC, and I apologize, this is confusing. Everyone can invest $2,200 per 12-month period, and that's a self-reporting number, or 5% of the lesser of the investor's annual income or net worth. And then if they make above 107,000, it can be 10%. So I'm sure everybody's scratching their heads and confused. And so here is a chart of where you can compare your income compared to what you can invest. So this chart is also within on Santa Cruz Works' website in the article discussing this event, if you'd like to refer to it again. The question is, how do you invest? So the crowdfunding offerings are on live. That Carnot Compression and New Way Homes are on WeFunder. Parallel Flight is on Start Engine. So you'll go to the platform and then select the raise, read through the terms, and then plug in your credit card or a debit card to invest or do an ACH draw. And then when you invest it, it sends the term, it automatically signs the contract for you. And then how you're repaid is either the platform, the company will pay the platform and then they'll put money in your account, or the company will pay your returns directly. So a month ago, we had a really exciting update to crowdfunding that the SEC announced that companies can raise up to $5 million per year, and the maximums for unaccredited investors have been removed, the $2,200 number per year, and it's now gone to the 5% and the 10% number. And then accredited investors or angel investors can invest as much as they would like to per year. So everyone should know that while these changes are really exciting, they're not codified into law yet. We're still waiting for the federal registry. We're still waiting for them to be posted in the federal registry. And then 60 days after that, we'll be able to use these new rules. Anyway, thank you so much. And I'm sorry my slides didn't work.
That's fine. Hillary, so you'll post those somewhere so that if people want to view it, they can.
Yes.
Thank you. All right. With that, we're going to call Joshua with Parallel Flight. Come on up, and you should be able to share your screen and
Hi.
be ready to rock.
Hey, everybody. Thanks to Doug and Santa Cruz Works and to Hillary for putting this all together. And I'm going to dive right into it. So I'm going to share my screen here. We are Parallel Flight Technologies, unmanned systems to save lives, property, and the environment. We are funded in part by NASA, NSF, and the USDA. And I'm going to start a little bit differently than a normal pitch. I'm going to start with the investment side because we're focusing on crowdfunding. This is our second crowdfunding offering. The first one was Regulation CF, which was oversubscribed. And now we're doing a Regulation A crowdfunding, and it's been open for just about 2.5 months, and we're super close to $1 million on this raise. And because it's a different regulation, we can do, we're raising up to, we're going to raise up to 7.5 million on this raise. And the other super exciting thing about it is that this will actually be tradable after the raise is closed. Start Engine just opened up a trading platform called Start Engine Secondary. So the plan is for these shares to be tradable on secondary. So whenever we're not doing a raise, investors can get some early liquidity, which is new for the industry. And so that's not a guaranteed thing yet, but all the paperwork is signed, and the platform, the secondary platform is live. So we're super excited about it. What is the problem? Electric drones can only carry a heavy payload for about 15 minutes. And this is a huge limitation on the types of missions that they can do. There are gas-powered drones out there, but they have a fundamental flaw, which it doesn't allow them to carry super heavy payload. So electric drones can carry heavy payload for a short time. Gas-powered drones can fly longer, but not with a very heavy payload. And we wanted to solve this problem. So we reinvented the drone so we can carry heavy payloads for a really long time. And this is really a 10x solution over the electric drones that are out there. And we are building a beta level drone that's going to go to customers in 2021. And it is going to carry 100 pounds for 2 hours, 4 hours, or 10 pounds for 7 hours. So we are going to be providing full stack solutions. So we're not just an OEM, we're an OEM plus a service provider. And we're focusing on several verticals: industrial logistics, firefighting, and healthcare. And we will also make money by selling maintenance and operator training, and then custom engineering as we develop solutions for these industries. And these are all sizable markets. Industrial logistics is, of course, a very large market. Healthcare, and especially with the push that's coming to distribute the COVID vaccine around the world, especially into hard to reach places. And this is even a local problem to the United States. For example, in villages in Alaska, it's very challenging to get some of these vaccines there. So there's a huge healthcare element to this. We've seen companies like Zipline get into that market, but their drones are fairly limited in terms of the size of the payload they can carry. So we can change that. And then, of course, firefighting. And that was really the genesis of parallel flight. And this is obviously a super local problem that we are very committed to building solutions for. We're working with CAL FIRE, with the Department of Interior, with the Forest Service to develop tactical solutions for firefighting. In terms of customer traction, we have 12 LOIs signed by corporate partners. We have traction globally with a lot of engagement from all sides of company. And we're really focusing on those traction customers that can buy lots of units. And we have a solid pipeline, and we're on track to build and deliver up to 10 units in 2021. In terms of the technological maturity, we have patent pending on our hybrid technology, on the algorithms that drive it, and on the redundancy behind the technology. We have a flying prototype. And as I mentioned, funding from several federal agencies that are all looking for solutions, not just to the drone flight time problem, but also to especially wildfire solutions. And that's from the USDA. We are currently building our beta level aircraft. I don't know if you can see that flying around. That's what we call our mule. And it is running our key algorithms on its flight controller, and it allows us to develop those algorithms for use in our product. And this is the actual beta level product. And you are among the very first people to see this. We haven't shown this picture to anybody yet, except for a couple people earlier today in an investor webinar. So you're among the very first people to see this. This is our beta aircraft that is nearing completion at our facility in La Selva Beach. We've hired a lot of engineers. We're hiring more. We're growing rapidly to get this thing on the market. And the investment opportunity here through Regulation A is up to $7.5 million. Like I said, we've raised just about $1 million, and venture capital can come in alongside this offering. So I hope you've enjoyed this, and I'd love to hear your questions. Sorry for going over time.
It's okay. That was great, Joshua. I know we have some questions here. We also saw black blocks in your presentation. We're not really sure why that was occurring.
Oh, no. Was it the whole, did you guys see the drone?
Yeah, but there were
Yes.
just sections of, maybe you had other apps in the background or something. Anyway, take it away.
I'm really
Karen,
sorry.
I know had some questions, Bud, Craig.
Okay, off mute. Great. I mean, this is exactly what we need for so many solutions. I'm not so sure about industrial logistics and healthcare. COVID will probably get delivered through or vaccines in other ways, but maybe in the future. But I'm very excited about the fire aspects, and you're working with CAL FIRE, et cetera. But you've flipped through it quickly. 100 pounds for 1 hour. Talking about flight, and we think of that, the helicopters dumping water, are these meant to identify smoky areas and then have somebody else come in and drop the water? Or are they expected to go in and drop water, which is very heavy? Give me a little bit more detail on the specifics of how they would be used, please.
This is a tactical resupply aircraft. We can carry food, fuel, water for drinking, tools to the front line of the fire where the firefighters are working. Logistics in a wildfire is a nightmare. It's very difficult. And a lot of times the manned aircraft are ground, as happened in the CZU complex fire. So nothing was being moved by air the first few days of the fire. We can fly through a complete smoke inversion. We can fly at night to bring those supplies to the front lines. We can also do controlled burns. That's what our grant for the USDA is for, to light back burns during a firefight to choke the oncoming fire. And then eventually we're going to scale up to drop water on spot fires. But that's applications a little bit down the road. It's a more technical application. I hope that answers your question.
Yes, thank you. But the tactical resupply, so you are saying that your drones can fly when nothing else can fly in some of these fires?
Absolutely, because manned aircraft generally do not fly at night in a fire. It's way too dangerous. There's only a few helicopters that will try to do that, but we can fly 24 hours a day. And so even if we're not sharing the airspace with manned aircraft right away, we can fly 16 hours out of that 24-hour period, because on average, the manned aircraft only fly 8 hours a day in a fire. Sometimes they don't fly at all. We've seen that many times this year.
Okay, so then one last question before I turn it over to the other guys.
Yeah.
So usually with drones, there's a question about how long it takes to recharge them to send them back out, or how many drones you can get up and coordinate in some period of time. So there's different strategies. Some people go for the swarm and they're up for a small amount of time, but you can bring them in and recharge them quickly. Or some have a few, they have a fast charger, or slow few. What's your answer?
We can refuel our drone in less than 5 minutes and have it up in the air again. It's a hybrid. It's a hybrid aircraft. It runs on, yeah, it runs on fuel, because that's what the firefighters have. They have gasoline for all of their tools. That's what they wanted. They wanted a gas powered drone. They have trouble with electric drones in the field because they have to bring all these batteries and charging equipment. They want something they can just fuel up and turn and burn.
Joshua, I'm a small investor already in the company, but I'm always really concerned about how do you protect the intellectual property of something like this so that DJI or somebody else doesn't just sort of copy everything you've done.
Sure. Well, we file patents, which we have several patents pending, and we defend ourselves against people that say that, oh, you know, you're copying my idea, stuff like that. We clearly have something that's totally novel here. And then finally, this is not easy to copy. It's much more difficult to do what we're doing than just putting electric motors in some new configuration on a drone. Now, sure, somebody can, you know, really put the money in to try to copy it, and maybe they'll be successful, but it's highly non-trivial, and you know, we're just going to keep defending our intellectual property with patents and international patents, and getting these products on the market, and trying to lead the industry, and also by forming deep relationships with our customers, where they're not just buying drones from us, they're buying solutions from us, so that even if somebody copies our drone, we still have that market. That's our plan.
What does one of these cost?
The base cost for the platform is $250,000.
Wow, for each unit.
Yeah.
Okay. And as you look at your different customers, what buying entity, like with the fire departments, you know, what budget do they have for this, and who is the decision maker?
So we're not working with local fire departments as much. That's not the big market. The bigger markets here are the federal agencies, so Department of Interior, Forest Service. The decision makers are the head of their unmanned systems divisions, and we're in close contact with them as we develop this product to their specification. And then in CAL FIRE, it is also the unmanned systems group and the aviation group, and we're working closely with CAL FIRE to build to their spec. And of course, they have a large aviation budget.
Sure. And who else is doing that? Who is competing with you to sell them these high performance, heavy load drones?
So in terms of heavy lift, we're really on the bleeding edge with these entities. There's a lot of drone manufacturers providing search and rescue applications, and there's some electric drone heavy lift systems that are out there, but they just don't meet the duration specifications that these groups require.
Where and is the company located in La Selva, or where is it located?
Yeah, we're right in La Selva Beach,
Mm-hmm.
right next to
Can
Watson.
you attract the engineering talent you need there?
We've been really, really successful. We've gotten some fantastic local engineers, folks that have worked at places like Bell and Zero, and then also, I'm bringing in some folks from Tesla that I've worked with previously. So we're not having a problem. Like, I think a lot of people are kind of ready to not be on the other side of the hill and get a little bit of a break from it and enjoy the beach and also the hardcore technology that we're building.
And how many people are in the company now?
We've got 10 right now, and we've got 3 people starting in January, 3 additional
Yeah.
engineers.
Okay.
And we're out of time. But hey, Josh, you forgot to mention that Santa Cruz Works referred some good people to your new team. So
Very much so. Thank you. I'm sorry that I failed to mention that, Doug.
anyway, thank you so much, Joshua. Everybody, if you have questions for Joshua, put them in the Q&A or the chat and he can answer them, but we'll also go live after everybody else has presented. Next up, we have Sibling. Come on down, Sibling. There he is.
Okay, I'll try to share, see if this works. Okay, can you see my slide?
Yes.
Great. So I'm Sibley, founder of New Way Homes. We're working to help build a solution to the California housing crisis. That's a big goal, but I've become more and more convinced California can turn our housing situation around, and that what New Way Homes is doing is one key part of that solution. So I was a technology entrepreneur, founded 2 software companies over 13 years, sold one of them to Comcast. And then I helped start the 180 initiative in Santa Cruz County, which is an effort that has housed over 1,000 chronically homeless individuals over the last 8 years. And that's got me really working on housing more broadly. So, first thing, California, the top reason housing's expensive is we don't have enough of it for the people who live here. So over 2 million homes short of a reasonable amount of housing per capita. And that with all the tension and regulatory change and everything else, that's still getting worse every single year. And so the next level down on the problem is that while barriers to housing production have been being reduced, we don't have large scale development models that can step in and create the housing that we need. So market rate model, because of how it's financed and how it works, can serve a big part of the market, but not the whole need or even the growth for our population. And publicly funded housing is 20,000 units a year in California. Even if we push to try to increase both of those, we're still going to be digging a bigger hole. So I really, as I got into this, concluded what we need is a new model. There needs to be a third leg of that stool, which is housing that's both lower risk and lower return and doesn't rely on competing for the scarce public subsidies. And that's what we're creating through New Way Homes. So at the highest level, we take impact investment into New Way Homes, which is a 501c3 nonprofit, returns a fixed rate of return for that investment, use that to start rental housing infill development. So we're building new apartment buildings that are everything from mixed income rental apartments to supportive housing. And then we get loans for construction from just normal nonprofit lenders, CDFIs, local banks, et cetera. And often, sometimes we're buying land, but often we're partnering with nonprofits that already own land and want to see it developed for mission-driven housing. So once we think this way and have this setup where we can actually finance things differently, then there's so many tools, and I could give a long presentation about using modular construction and more environmental sustainability and all these things put together and how they create housing somewhat less expensively and in a way that we can make it more affordable. So it starts with that impact investment, but that opens up a whole lot of tools for more density, transit-oriented, et cetera. So we have a whole portfolio now of projects underway. Our first 2 projects are in the construction phase, but we've got in all these projects that we're actively working on and getting permitted, we've got everything from supportive housing as that one biggest category, all the way through to different levels of income levels our housing is reserved for, as well as a chunk that is close to market rate, but effectively rent controlled, so it becomes more affordable over time. So, and we're also really working on housing equity. One of the ways we're doing that is working with several Black churches in Oakland, where we have a path for them to fully own the housing in the long run, to reduce displacement in those communities that have been historically discriminated against. We've been funded, we've got over $3 million into the New Way Homes Fund to date. And, but then we also raise money into the individual projects, everything from grants and donations to the loans, as I talked about. So that's funding we've gotten to date, including directly into New Way Homes from a variety of institutions that are recognizable around our region. We're pretty excited about, and a whole bunch of individuals who've participated as well. And so now we're raising the next $1 million that we need to get another 300 units permitted in our pipeline. That image there on the little image is from a permanent supportive housing project in Santa Cruz, 120 units that we just got fully approved by the city last month. So we're super excited about that. And you can participate by going to our WeFunder page there, or letting me know if you want to talk further about it. I will say, 300 units doesn't sound like a lot when I'm talking about the housing crisis, but our goal here is to scale this so that as we back the investment by the real estate assets that we create, where we're maximizing affordability, then we believe this can be a model where it's a modest rate of return, but that's a risk-adjusted market rate of return as we lower the risk over time with our projects and assets. So that's what we're going for as a way to scale it, and using impact investment as a stepping stone to get there.
Oh, there you go.
Nope, that was it. That was the end. Sorry.
Oh,
I was sticking to 5 minutes, so that's what you get.
you did really well. Thank you.
You have to ask me questions from here.
All right, take it away, guys and gal.
So I'll start. Sibling, I am a very small investor also in New Way Homes, and I'm really impressed with sort of the approach. But I'm wondering, California is terrific, and we certainly have a need. Is this scalable nationwide? Is there, some way to sort of franchise the idea? Is there, how do you get greater scale?
Well, I believe that California is enormous scale. We're talking about billions of dollars of housing that we can create without leaving California, right? So I do think it's important, rather than scattershot approach, that we build and show how to do scale here. But yes, absolutely. I get calls from around the country, and my first approach is just to spread impact, because we need this to be a part of the industry and a part of models that are out there, not just one organization doing this. So I always answer those calls. I talk to people on the East Coast, wherever, and everything, there's things that are a little different everywhere you go in different states about the regulatory barriers or the market dynamics. But yes, Seattle, et cetera, has fundamentally a similar problem. So there's no question this technique is useful. We're interested in figuring out how to do that. But at the same time, sticking to where we know things extremely well for now.
I'm just curious as to whether or not that you can have the forethought to sort of like create a methodology that can be easily transferred, not necessarily you doing it yourself, but here's a package, here's a digital platform that allows you to do this in your hometown.
Yeah, and I think training, because honestly, half my job is telling all the different parties that we interface with why we want to do things a little bit differently and on every front. And so really there's a lot of need to think a little bit differently and get out of structures that have been created. I could see training, I could see, packaging, I could see some kind of, franchise, or just a big fund that, like, once people are doing something the right way, then you help fund them. Depending on how we grow, I think absolutely. And Craig, I'd love to have a 2-hour conversation with you about that topic sometime.
Hey, Sibling, it's Bud.
Yeah.
So full disclosure, I am also an investor in New Way Homes and one of the impact investors as well. I think for people on this video conference, what they would mostly be interested in if they decide to invest is what is the avenue for return, and how do they get liquidity in their investment? Most, like the previous investment you invest, they even talked about a share exchange where you could have your start engine, I think was the name of it, where the shares are tradable. What is the liquidity in New Way Homes, and how do people get their money out?
Yeah, so our investments, like on the WeFunder platform, we're looking for patient capital. So it's a 10-year loan effectively to New Way Homes, and we make annual interest payments of 4.25%, whatever. So you can go and read all the details about that. But the point is that, you know, we're looking for loans, and from these different foundations, they've given us loans like that are structured like that, interest only loans. And so then it happens in a couple phases. New Way Homes then deploys that capital to initiate projects. The hardest part of projects to fund is the getting the site, making those agreements, investigating the site, going through planning process, and eventually building permits. That's the part that if you change how that's done and how it's funded and the motivations there, you get a very different product, and everything can flow from there. So most of the cost of projects can come from the nonprofit lenders that are out there. And so we often are paying back the New Way Homes Fund when we're starting construction, because all the various sources of construction funding can pay that back. And so our first two small projects have fully repaid the New Way Homes Fund from the money that was used to create those projects and initiate them. So we have these cycles going on where we start projects and get the funding back to the New Way Homes Fund. And then, you know, we prepare in that to pay back investors their principal, you know, at the end of the term of their loan.
Okay, but this is a very different kind of investment than the previous investment, right? So that's more like a traditional company. And you're saying that you're looking for patient capital with a fixed 4.25% return over 10 years, and then a repayment of principal at the end of 10 years.
That's right. It's why we call it an impact investment. People are doing this, yes, getting a little return, but really being in it to help solve the housing crisis. And as I said, what we're trying to build, then the big leverage is trying to build something where, you know, insurance companies invest in buying apartment buildings all the time and getting a 4% return, and are happy with that. We just have to get the risk profile to the point we can attract those sources of capital that are out there.
And if one of those sources of capital comes in, does that mean that the 10-year period is shortened? If someone's an investor in New Way Homes and one of your projects gets that kind of liquidity after 5 years, does that mean that those investors will get liquidity?
No, we intend to stick to that 10-year time frame, because when a project pays back the New Way Homes Fund, we reuse that in the next project. So we hope to use each dollar at least twice, and ideally 3 times during the course of that 10 years.
Okay.
Karen, do you have a quick question before we?
Yeah, Bud tried to take up all the time. So I'll just ask you a question. Tell me about the Sibling. First of all, I think I've heard about this from you a while back when you were starting. So it's great to see your progress. Fabulous. Talk to me about the community people that are working with you in terms of the county and getting permits. And then also there are companies that build in these block ways that are green, very simplified, like Hayward Lumber is very much into this, and they're a local company. Have you been working on relationships with like county planning with some of these businesses to help propel you forward even further? Now that you've got this, I'll call it a seed, really started, you've got some great growth, but now how do you expand beyond that?
Yeah, I'm super involved on the policy side and on the movement in California to allow more housing in the right places, you know, and infill near jobs, et cetera. I actually wrote a bill this last year that got passed by the state legislature in 2020 here about church parking and making it easier for churches to build housing that is at least partially low income affordable housing. And then I have great relationships, yes, with in our region, with council people and departments, et cetera. So that's a big part, of what you have to do. And fortunately, when I alluded to like barriers are coming down, the state legislature in the last few years has made it so that our kind of projects that are more affordable than just only market rate condos really have to be approved. We do everything within zoning, and then state laws allow us a whole bunch of ways we can adjust the local zoning and still count as within zoning. So we can get more density, more height, less parking, different things. And the cities effectively have to approve them because they have not been meeting their mandated goals for the amount of affordable housing in particular. So we're really experts. Literally, yesterday it was Salinas, sometimes it's Santa Cruz. We're explaining some of these rules to the folks in the departments, but we have a very cooperative relationship everywhere we can possibly have that. And because we're finding ways to use all of these rules that are meant to allow this, but there's not enough development taking advantage of these techniques.
What about so that's fabulous. What about some of the building contractors or building companies or lumber companies that have some of these prefab buildings and so on? Because it seems like that would help you quite a bit as well.
Absolutely. So I was just last week up at Factory OS in Vallejo. It's a big new, factory that Google invested in, et cetera. And we're working with them on our permanent supportive housing project in Santa Cruz. And we're trying to get them to have that be the first time they build to the passive house standard, which is way more energy efficient, basically net zero energy, and mostly using passive heating and cooling. And incidentally, also allows you to create great air quality, even in smoke events and stuff. So we're pushing some of those suppliers, working with another prefab wall supplier that where we're trying to push them on the environmental sustainability, where they want to go anyway, but we can then be a project that helps them get there and work through that. So that's just one example, but absolutely, with everybody is needed to. And I've been kind of assembling a team of architecture, engineers, general contractors, and then some of these modular suppliers who will all do things more efficiently and frankly for less, so that we can have a system where we can get some of this affordable housing done more efficiently. I could go into a lot of detail, but that's the.
Thanks, Sibling. I'm out of time according to Bud, so let me stop you there. Thank you.
And when you see the Cheshire cat grin, that's me saying time's up. Sibling, thank you so much. Really appreciate it. And we're now off to Carnot with Todd. Come on down, Todd.
I'm Todd Thompson. I'm one of the co-founders and the CEO of Carnot Compression. And we are bringing to market an isothermal compression technology. We've been, sorry.
Put it in presentation mode.
Okay, I'm trying, oh, there we go. Sorry about that. Is that better? Yeah. So we've been funded by the National Science Foundation and the California Energy Commission. Between those two agencies, we've gotten over $3.5 million of grant funding to develop the technology. So we are really now transitioning from being an R&D company to a company that actually has something that looks and feels like a product that we can sell to a customer. And we are looking to go out and deploy some pilot projects early next year and to get through proof of concept in field operations. So what we do is we solve the heat of compression problem. So what is the heat of compression problem? Well, most conventional compressor technology, when you're compressing any type of gas, the energy or the work that you use to compress the gas creates a lot of heat. Conventional technologies, that heat energy is largely wasted. And the mechanics of the machines are such that most of the technologies deal with addressing the heat by flooding the compression chamber with oil. And what that does is it can lead to a lot of post-treatment in terms of expensive filtration and for many applications leads to a lot of downstream contamination where you've got oil carryover in your compressed air stream. What we do is we use water to compress air. So we literally put water to work, and we use the weight of the water as our compression medium as well as our heat sink. So we've got one moving part in our compression process, a spinning drum, and we mix air and water at the center of rotation, and we essentially create centrifugal waterfalls. So we spin a drum roughly 18 inches in diameter at 2,500 to 3,000 RPM, and we can compress air 100 to 150 PSIG, which is design pressure for most industrial applications. As we compress, we have instantaneous heat transfer from the gas to the water. The water acts as a giant heat sink, and we dissipate that heat a couple of different ways, either through an external heat exchanger or for many industrial applications where there's a need for on-site hot water or warm water for preheating or another usage. We can actually plumb the system where we retain all of that heat energy and use it for on-site. We've got a broad IP portfolio around the technology, 5 patents at various stages, 3 issued, and we filed broadly to protect our IP, both domestically and internationally. So we're going after a large addressable market that has a significant energy spend. The global air compressor market is forecast to be about a $40 billion annual market in terms of new sales by 2025. Roughly 1/3 of that market today is oil-free compressors. When you look at energy spend, when you look at manufacturing electricity consumption, roughly 12% goes to powering electric motors that are driving air compressors. And we've run the numbers and estimate over $200 billion a year annually is spent on energy for compression. So some of our key target markets are early stage, relatively low horsepower oil-free applications in the automotive industry, the life science industry, dairy industry, food and beverage, and then broadly manufacturing. And then as we scale up, we can see some interesting applications for semiconductors and other high-tech applications. So what's really disruptive is a path to significant energy savings for compression. When you look at lifetime cost of ownership for compression, roughly 3/4 of ownership costs are electricity. The balance is split between first cost and maintenance. And our technology, by being isothermal in nature and absorbing the heat during the process, we've got a pathway to reducing those energy costs by 20% or more, depending on what the incumbent technology is. So we're nearing commercial readiness. As I said, on the left, you see our current prototype test unit. We've put a few hundred hours on that unit, and the unit is actually going to be shipped to an industrial site in California in Q1 for field testing. And based on everything we're learning, we're making the system more compact. We're making the heat dissipation modular, and the commercial design is mostly finished. And we've got many different potential.
Hey, Todd, we need to give you 30 seconds here, warning. So if, you want to go into.
I am pretty much
skip over
done.
that and talk. Okay.
So we're raising money on Start Engine, startengine.com/Carnot Compression. And you can see my contact information there. But to sum up, broad IP portfolio nearing commercial readiness. All the heavy lifting on the R&D has been funded through grant money, and looking to go to market early in 2021.
Great, thank you. Okay, Bud, Karen, Craig, take it away.
Who are the customers, Todd? What markets, like where's your first unit going, and the California Energy Commission, who are they wanting you to deploy this to?
Okay, so the CEC's interest was in reducing energy consumption for industrial applications. So we are shipping that unit to a manufacturing site in California. And we haven't disclosed the site yet, but it's kind of a plain vanilla generic manufacturing type of operation. We are also looking at some niche applications. One interesting application we're looking at is actually in the dairy industry for robotic milking. And there's milking technology out there that runs off of compressors, and the need is for oil-free compressed air running continuously, and the incumbent technology is really not designed to run 24/7. So we, that will likely be one of our first paid customers is in the dairy industry. And we're already demonstrating relevant pressures, relevant flows for that specific application.
Okay. Can you go back to just the last slide while you're answering the questions? I'd just like to look at the backgrounds of the team.
Sure.
Oh, thanks.
Yeah. So the team, my background's in finance, BD. I'm the only non-engineer on the team. We've got 3 full-time engineers working on it right now. We've got a part-time sales and marketing director who comes from industry. And then we've got advisors that have a breadth of experience in various industry applications.
Hey, Todd, do you envision your company being a manufacturer of these tools, or will you license this to others and derive license fees?
Short term, we are looking to do some of our own manufacturing to get out and get into the field, but I see longer term licensing revenue and partnering with corporates that are in the business already.
Todd, a question. So you talked about taking the heat that is thrown off from compressing the air and using that. Is that correct? Did I understand that?
Yes, that's correct.
Okay. Where a lot of other people just use heat dissipation and try to get rid of it, you're going to try to capture it and use it. I have a bias here where I've always thought of compressed air as being very, very expensive in niche applications. I can see it in industrial applications where you have a lot of power tools that are run with compressed air, but I actually don't see the use beyond kind of industrial applications. And, if you want to look at something with very little energy or very little cost, trying to do something like geothermal or something to get to capture heat that is more natural and it seems easier. So help me think beyond the industrial applications and fall in love with compressed air, because compressed air has been around for a long time and not been super successful, right? For, we're going to compress air and store it in the ground and then use it later, or use cars. And it just never seems to really click, except for maybe some of these niche areas.
Right. Well, we're not chasing compressed air energy storage or, kind of the business model that Lightcell or Sustainax had years ago. We're not creating a technology and also trying to, chase a market that doesn't exist. We're chasing a large established market. Compressed air is called the 5th utility. And there's too many processes to list in this call that, require compressed air and really don't have any alternative. So I mentioned one niche application that is, small and modular, and that's robotic milking. And milking machines need compressed air to run their pneumatic systems. Another good example is automotive painting. The paint sprayers need clean, dry air. If you have oil carryover in the paint stream, it can ruin a paint job. Pharmaceutical applications for packaging, that anytime there's the ability for a compressed air stream to touch an end product, there is high sensitivity to any kind of contamination, oil carryover. Oil-free compressed air is at a premium for those applications. Dental air, every time you go to a dentist, those tools run off of compressed air. So, I mean, you go down the list and it's, you know, compressors are everywhere. And I agree, it's an expensive utility. And there's, you know, I showed you some of the stats, large energy spend. And we're trying to really do two things: drive down that energy cost of compression, and then also really eliminate the need for oil flooded compressors. I mean, our big vision is all compressors should be oil free. And we believe that the space technology can not only carve out a large piece of the oil free market, but can also move users that are currently using oil flooded compressors to oil free compressors.
All right, we're sorry, we're at time up here. Craig, did you have something you wanted to quickly ask? Or
Nope.
Okay, great.
Can I ask one more? Can I ask one more
Sure.
quick question? Todd, is there a vision for a line of compressors here? I mean, you mentioned a lot of very different applications. I would assume a dentist office would need a lot different compressor than a large industrial application. And how scalable is the technology from the small applications to the large?
Okay. So initially we're looking at 5 to 15 horsepower. Mm-hmm. And, you know, that's really kind of the range that we've been testing. Broadly speaking, within the first 5 years, 5 to 50 horsepower, because that is a very underserved market, difficult to serve market for oil-free compressors. Beyond that, over 50 horsepower, you know, we think that the technology is inherently scalable there. Scaling to those levels will be, most likely will be with industrial partners.
Great. Thank you so much, Todd. There's some questions for you in the Q&A that you can type in your answer there, but thank you very much. And there's Gary, right on time. Thank you. California FarmLink. Take it away.
Thank you, Doug. Good evening, everyone. My name is Gary Peterson. I am the Director of Communications and Philanthropy at California FarmLink, a nonprofit organization based in Santa Cruz County. And I'm going to pull up my screen here and walk you through a bit of our work. So here we go. So we are investing in the next generation of farmers, and we are working up and down the state of California. As I mentioned, we're a 501c3 organization. We have a mission to invest in the prosperity of farmers and ranchers through lending, education, and access to land. And we value equitable access to opportunity, resilient working landscapes, fairness and accountability, and learning from diverse farmers and ranchers. We are a community development financial institution, which gives us the opportunity to draw in certain types of capital from foundations and banks. And now what I'm speaking with you about tonight are the FarmLink investment notes, which is an opportunity for individual residents in California to be part of investing in our work to invest in the prosperity of farmers and ranchers. So this is what's happening out across the state. Small-scale women and farmers of color are challenged by these barriers. Small loans are often needed. You know, a lot of the lenders, even community banks that you recognize as maybe being lenders in the agriculture industry, have a tough time making loans that are less than $50,000. So we're very much prepared to do that. A lot of these farmers we serve are beginning farmers and within the first 10 years of their careers. And so we are very much focused on adjusting our approaches to address situations where they have limited business or credit history. And that often goes alongside the lack of traditional collateral. I've got a dear friend over in Salinas Valley named Rigoberto Bucio. He's always good for a quote. In fact, he's quoted in the Washington Post this week. I don't know if anybody saw that article about farmers in West Virginia and Salinas, but Rigo says that it opens your mind. You're aware of another person who you didn't know was in you. And he is quite a character. He's right there with his father. So So our lending is all about access to capital for this next generation of farmers. We do annual operating loans. For example, people need to get their strawberries in the ground in fall and often need an upfront investment to accomplish that. We can arrange interest-only payments until the crop comes in April or May. We do land loans. One of our niches is actually refinancing loans. Sometimes farmers get into deals that may not be, maybe hard cash loans that are not sustainable over the long term, but we can help folks to refinance out of that situation and help them enhance their land tenure. And we also do equipment and we do conservation loans. We have a growing portfolio of incentive loans that catalyze regenerative practices. And all of our loans come with technical assistance from our expert staff and our partners in the field. So as an example of what we did during this global pandemic, first thing we did was roll out emergency loans, 0% interest, no fee, no payments for 6 months, up to 20 grand. These are non-federal loans. These are for folks who may not qualify to participate in a federal program, such as the SBA PPP. We did 112 of the PPP loans for about $2.4 million. Our loan team was up long hours doing that. And just a picture of our standard loans, 7 to 8% interest, 1 to 7 year terms. We turn those around typically in 4 to 6 weeks, which is pretty quick turnaround. The farmers value that. That 7 to 8% interest is literal. We have a very flat pricing structure, and that's a deliberate part of our strategy to support fair financing for farmers. We do not charge 16, 20%, depending on somebody's underwriting result and credit score. So we've made loans in 30 out of 58 California counties. As you see, we have a high concentration of lending in the Monterey Bay region. Monterey County is in the lead, followed by, in terms of number of loans, San Benito, and then Santa Cruz County, which is actually very much a reflection of the density of the farmers that we're in touch with in those counties. So our loan portfolio here, if you can see that 2020 projected, we're pretty much there right now. This is a little bit dated. We're at just over 19 million. So we're probably going to come close to touching $20 million for a total portfolio size here at the end of 2020. We have an opportunity that we've utilized to sell our land loans on the secondary market to a quasi-government entity called Farmer Mac, and that enables us to recycle our loan capital and continue servicing those loans for farmers, most importantly. So our loan fund composition goals involve raising 10 million over the next 4 years. And this includes the FarmLink investment notes, as I mentioned earlier. These are available for amounts ranging from 1,000 to 150,000 for California residents and companies. It's licensed by the California Department of Business Oversight. We also have foundations and banks involved. We have some local foundations that are pretty large, have pretty large placements in our fund, including Community Foundation Santa Cruz County and also Community Foundation for Monterey County. So we have a strong track record. We have a 20-year reputation of trust out across the state of California. We have experts. We have a network. We are innovative. We're the nation's first community development financial institution focusing on organic and regenerative farming. And we have a bold vision. We're committed to helping farmers to grow their wealth, increase their profitability, create jobs, catalyze organic practices, and build sustainable food systems. And we invite you tonight to be part of our work to realize a healthy food system where farmers and ranchers have equitable opportunities to build wealth and conserve natural resources. And that is my presentation for this evening.
Thank you, Gary. That was great. Take it away, Karen.
Sorry,
Bud.
a question from Bud. Are you looking for basically loans from folks? Or?
Yes, indeed.
Okay. And what are the terms of the loan?
It is a investment note. The terms are 2, 3, 5, 7, and 20 years. Actually, our most popular note is the 7-year note, which pays an annual dividend of 2.25%.
Okay, so this is much like what Sibling was describing in terms of patient capital and someone that wants to invest in regenerative farm. they can give you, $100,000 or $10,000 or $1,000 for 7 years, or you'll take as low as $1,000 for 7 years and earn 2.5%.
Indeed, yes.
Okay, got it.
And we are also equipped to bring in investments through ACH bank transfer or checks. It's a note that I actually arranged with you individually through HelloSign. We make it very simple, just a few data points from you and we're ready to go.
And can you take IRAs or SEPs or other vehicles other than just straight cash?
This is actually, this is a direct public offering, so it's not possible to hold it in a brokerage account.
Okay. No, but I mean the source of funds.
Yeah, if you're willing, if you can liquidate, the funds would need to be liquidated out of that type of account.
I see. Okay.
I see a lot of similar activity out of Kiva recently, where small farmers are using crowdsourced lending in these type. Is this a competitive environment? Is this a non-competitive environment? It was interesting to me to see so many farmers using these type of platforms.
Indeed, that's a great question, Craig. This is, we're distinct in that we are helping these farmers along the way of applying and accessing credit directly from California FarmLink. So we're working with a lot of farmers with limited levels of formal education, a lot of immigrant farmers, a lot of farmers of color. People are have invested themselves in the industry for years and have become entrepreneurs operating their own farms. So whereas folks can get on with Kiva and get registered and so forth, that's one approach. But we are very much a personalized lender working with farms up and down the state.
Karen, question here. So Gary, thank you for your work in this area, especially with our food and healthy food being really important in helping farmers survive. So we continue that. But I look at this realistically, and especially in the Bay Area, we have a lot of large family farms, right, that have grown, and that it seems like it's very difficult for small farmers to actually be successful. And there are issues with respect to technology that they deploy, with the right seeds, with the scale that they have. It doesn't look good for a small farmer. So are we almost encouraging something with these small farm loans and encouraging them to compete in this industry where they really can't thrive very well anyway?
Yeah, that's a really important question, Karen. That is boils down to a vision for California agriculture and how we build equitable opportunities in the industry. California FarmLink is placing its bets on a new generation of farmers. These folks are, by and large, successful. Successful, of course, is a subjective term. Our cumulative default rate after almost 8 years of lending is less than 1.5%. And we are working with farmers year over year and watching them grow their businesses either through, as measured through employment or a growing equity on their balance sheet. So we are we're bullish about the future of small and medium-sized farmers in the state of California.
So let me follow on with questions about, do you have mentors for them? Because it's not just about financial investing, but the mentorship, I think, is a huge part. So if you take somebody like a Tanner Antle, who are great in themselves, but also great community individuals, without having mentors like that, and maybe availability to equipment, like whether it be their old equipment or their new equipment when it's offline to be able to use by a small farmer, I mean, some type of relationship. I still don't see how they can be very much of a success. And so if we want to grow that, I think it takes some mentorship and partnership with some of the big ag for the Monterey area, but small ag for the nation.
Yeah, we do have a technical assistance and mentorship network around the state. We have people that are often inclined professionals to offer their services pro bono to the farmers we work with. It's not something that we've been able to invest in consistently over the years, unfortunately. But we do encourage a lot of farmers to work with each other and to work, and most importantly, with their buyers, right? And we do have some partnerships, one with the Briar Patch Co-op, which is actually a pretty significant co-op in terms of sales per square foot up in the Grass Valley and Nevada City area, whereas their suppliers can get loans at half of our normal interest rate because we're sharing the risk with the co-op. And we're about to launch a similar partnership with another major natural foods co-op grocer in California. So that's a big part of our work is assuring that folks have viable and consistent positive marketing partnerships.
And one last question, sorry, but I love this area, Gary. Have you looked at any thoughts about organic and it being specialized and maybe more attuned to smaller farms? One, two, vertical farming of sorts so that you don't need as much vast land and it takes, it's kind of like a flank move on the existing farms that acquire vast lands. Any thoughts on that?
Well, more than 80% of the growers that we work with are organic growers. We have not yet had a vertical farming operation. Our footprint is largely in rural areas. Although we will be investing more in urban farming systems in the coming years. So California Farm Link is rooted in 20 years of relationships with farmers up and down the state, and we're actually looking at new opportunities to branch out in our lending.
Okay, thank you. My battery's going low, so I'm going to search for electric cord.
Okay.
Right.
And Craig, did you have a final question or two?
No,
Okay.
thanks.
Awesome.
All right. Thank you, everyone.
Thank you very much, Gary. And what you're doing is so important for our food supply and what I call essential workers. So thank you. So we're almost at the tail end here. I'm going to ask Hillary to come on if you have any final words, Hillary. And if you have questions in the audience, put them in the Q&A now so that we can ask our startup founders here to respond to them directly. But any last words, Hillary, before we?
Thank you everyone so much for coming. And Doug and I are delighted that, 30 plus people were able to attend, and we hope to do this again in the future.
Yeah, I think if we learned anything, we will need to give people more time. Like, I think there's some really good questions, and if you want to dig deep, we're going to need to give them a little more time. So anyway, that's it. I don't see any Q&A going on. There's one from John D. Where do people invest in California Farm Link? We'll put that, John D, it's on our website, but we'll also put it in a link in it to you, send it to you. So with that, I think we are at the end of this event, and I want to once again thank you to Craig, Bud, and Karen for participating. And this has been a great experience. It's the first time we've tried this virtually, and I think it's a good thing that we pulled it off. So, and thank you to all of our sponsors. And with that, we're going to say goodbye.
Thank you, Doug.
Good job.
Thanks.
Thank you, Doug.
Thanks.
Good job, everyone.
Stay safe and healthy.
Bye.